Today, we're looking at an analysis of ONDS holdings, asking if the recent correction is over after its 5% gain.
A really solid piece of work here.
Absolutely. To make it even stronger, let's just jump right into the first point. The analysis report has a real opportunity to deepen the discussion on financial stability. It's about integrating that dilution risk directly with the cash reserves.
Yeah, I saw that. As it stands, it builds this really compelling case around the $400 million in cash, the cash fortress, which is a great term.
It is, and it argues that this basically takes financial distress completely off the table.
But then it puts the dilution, that 6 or 7 million shares from the note exchange, all the way over in the bear case section.
Exactly. It's treated like this totally separate abstract threat.
And that separation is the weakness, isn't it? Because by isolating the cash from the dilution, which is really the cost of that cash,
Right.
the write-up misses the chance to give a more sophisticated net assessment of their whole capital strategy. It just makes the dilution feel like some far-off problem.
I completely agree. It feels like it's making a strong claim about financial safety, but isn't fully accounting for the move they made to secure it.
So what's the fix?
Well, my suggestion is to integrate those two factors. Just put them in a single, comprehensive financial assessment section.
Okay.
You need to explicitly weigh the short-term dilution cost against the long-term benefit of that massive cash runway.
That contextual integration is so key. It totally shifts the frame. How so? Well, instead of just seeing dilution as this negative thing hanging over the stock, you start to see it as a calculated expense.
A strategic trade-off.
Exactly. You could even frame it as the cost of maintaining the fortress.
Hold on, though. If we frame it as a cost, aren't we risking kind of normalizing something that reduces shareholder value? How do we stay objective?
That's a crucial point. You stay objective by grounding it in hard numbers. The analysis needs to ask the direct question: is a 6 to 7 million share increase a fair price for a $400 million cash position?
And the runway that buys them.
Right. That's what an analyst should be doing, determining if the price they paid was actually worth it.
And to make that tangible, you'd need to quantify it right away. A quick calculation of the percentage impact, what those shares do to the existing float.
Yes, because if it's 10% dilution, that's one conversation. If it's 20, it's a completely different story.
And then you can bring it full circle.
How do you mean?
You can then discuss how that $400 million cash balance, that strength you already established, might actually help the market absorb that new share supply.
Ah, so you turn a bear point into a necessary financial strategy, one that ultimately protects the company's future. I like that. It adds a whole other layer of depth.
It moves it beyond just a list of pros and cons, for sure. So, okay, that covers the balance sheet side. But let's tackle the elephant in the room.
The valuation.
The valuation. To fully support the bull case, the analysis has to build a much stronger analytical bridge between that massive price-to-sales multiple and those high $12 to $13 price targets.
Yeah, I really like how the write-up captures the tension here. On one hand, it correctly flags that ONDS trades at this, staggering PS multiple. Over 40 times.
Right. But on the other hand, the bull case cites that explosive 582% year-over-year revenue growth. And of course, that stifle call.
The generational inflection point.
Exactly. But the connection between those high targets and the extreme valuation right now, it relies way too much on just citing that growth percentage.
It assumes the reader will just make the leap. Big growth equals high multiple is okay.
And that's the missing piece. The material needs to show how future growth is expected to shrink that multiple down to something reasonable. Without that analytical bridge, it's just wishful thinking.
The why now of the valuation needs a stronger defense.
So the suggestion is pretty straightforward. Expand the discussion around that growth story. We need to drill down on the analyst's rationale, stifle Needham, and explain the underlying assumptions.
What assumptions about market capture or, future margins are baked in that make a 40x multiple okay today?
Yes. And building on that, it needs more scope. Don't just cite the 582% growth.
You need to reference the total addressable market, right? The military and commercial drone segments. That's what's supposed to sustain the momentum. That's the justification.
Scope and scale. You have to have them when you're defending a multiple like this. This is a stock trading on tomorrow's revenue, not today's.
And to ground that future expectation in today's reality, maybe you could introduce a forward-looking metric.
What do you have in mind?
Well, maybe pose a question, like if the PS multiple were to drop to a more, let's say, rational 10x for a high-growth company, what annual revenue number would ONDS need to hit to justify those analyst targets?
Oh, that's a great example. It gives the expert a really clear, quantifiable goal to track.
Right. It changes the question from, is 40x too high, to, can they hit X million in revenue by Y date? Much more actionable.
You'd also have to pull more detail from that Stifel initiation. The report mentions the generational inflection point. But what does that actually mean?
Exactly. What are the specifics? Is it their tech? Is it a regulatory moat? Specific contracts?
Whatever it is, that's what Stifel used to get to $13. You have to include it.
It moves the argument from the analyst said so to the analyst said so because of X, Y, and Z. That gives the whole thing analytical teeth.
Okay, so that really strengthens the fundamental case. Let's transition now to the technical side, because I see a similar need for, well, more justification there.
Moving from the fundamentals to the charts. This is vital, especially given the title of the analysis.
That's right. The technical analysis needs to fully establish the significance of that $9 breakout level it mentions in the conclusion.
I do appreciate that it clearly establishes 750 as critical support. Previous resistance turned support. That part is excellent. It's grounded.
It is. But then the next step, breaking back above $9 to confirm the correction is over, it's just kind of introduced without any context.
It just hangs there.
Yeah. The person reading is left wondering, is $9 an arbitrary number? Is it a moving average? What is it? That lack of justification really weakens the technical verdict.
It feels like a guess, and that undermines the authority of the entire technical call.
So the suggestion is to bolster that section, provide the precise rationale for why $9 is the necessary breakout threshold.
So how would you do that? What are some concrete examples?
First, you have to specify what $9 represents on the chart. Is it a major Fibonacci retracement level from the drop off the highs at 1170?
Or maybe a prior high from the recent trading range.
Could be. The analysis just needs to pick one or two specific indicators that validate $9 as the line in the sand.
Giving it that structural anchor is vital. And we can't ignore that 22% short interest the report mentioned. That's a huge piece of the puzzle.
You have to link the $9 break directly to that short interest.
Ah, okay.
You explain that this specific level is the likely trigger point for a potential short squeeze accelerator. The price confirms the trend, but the shorts provide the fuel.
That combination makes for a much, much stronger breakout narrative.
And just structurally, I think the discussion of the $9 level needs to be moved up earlier. It shouldn't be saved for the conclusion.
Put it in the big question section.
Exactly. So the technical roadmap is clear from the start. It establishes the boundaries right away. 750 is the floor. $9 is the ceiling we need to break. It becomes immediate and actionable for someone tracking the stock.